Good afternoon, everybody. I'm Diane Stanton with Public Affairs at CalSTRS.
And
I've got
Kimberly Pence from Member Account Services. It's okay. Welcome everybody to EAC. A good agenda for you here. Hopefully you all have copies of it. We will have some legislative and regulations updates along with Member Account Services update and some pension solution updates along with our open forum and some time for some Q&A. As you can see on the slide, if you have questions, everybody is currently muted and we will be asking you, if you do have questions, to use the raise your hand feature. You can also use the Q&A icon and type in your question there. And as always, if you are a call-in participant or don't want to use either the raise your hand or the Q&A feature, you can email your question to the email on your screen. And for those of you on the phone only, that email address is advisorycommittee@calstrs.com. Currently, you will have audio capabilities when you ask your questions only, and you will be asked to unmute when we call on you. All right, so we will go ahead and get started by handing it over to Joycelyn.
Afternoon, everyone. Joycelyn Martinez-Wade, Director of Governmental Relations here at CalSTRS. So we can go to the next slide, which is just the title slide. But I wanted to update you because since the last time we met, the legislature closed out their session. And so I do have some updates for you. Our housekeeping provisions did make it into AB 2101, which became an omnibus bill with CalPERS housekeeping changes, and the 37 Act counties also had their housekeeping changes in that. So I'm going to go through some of the provisions that affect employers most right now. And if you have questions, please feel free to ask. And basically, all of these go into effect on January 1st, 2021, and you'll be seeing some of these explained in directives and circulars in the upcoming days to help you out with them. But I did, and we've gone through all of these provisions before, but I did want to highlight for you on basic and excess sick leave. They are defined now where basic is 12 days or fewer, and anything more than that is excess sick leave. And I wanted to draw your attention, and this is more for the benefit side of things, but members, if they do have sick leave that they would like converted to service credit upon retirement, they can only do that in one system, basically. So if they're retiring from CalSTRS and they had sick leave for previous CalPERS employment and they're using that for their CalPERS retirement benefit, it's getting converted to service credit, they cannot use that for CalSTRS retirement. On the definition of creditable service, audiometrists are called out specifically now, and so it clarifies that their work is creditable if they hold a certificate of registration issued by the State Department of Healthcare Services. So that is in black and white now. I also want to highlight on the PERS-STRS election. So this is the Retirement System Election Form, ES 372. You no longer have to transmit a copy of that election form to the unchosen retirement system, but you do need to retain a copy of that form. And of course, that'll help you if any questions come up in the future. For elected officer leave, we just provided some clarification around this. We made it very clear that people can be on partial leaves of absence for elected officer service. They don't have to be 100% out of the office, if you will. And then due to that, only the time that they are an elected officer would be subject to the elected officer contribution rate for employers. Less important right now because you will be paying the same contribution rate regardless of whether one of your employees is an elected officer or not. But in the future, that may make a difference. In the past, that rate had been higher than what you paid for most of your CalSTRS members. We also make it very clear that those folks on elected officer leave will receive benefits for that time as they would have had they been working their regular job. The law just mentioned service credit, but it's always been understood that they'd be getting the final comp and everything that comes along with that. And on the retirement incentive program, and I know there will be a new directive on this, just want to be clear that there are two situations that have been added where a member who has a retirement incentive under this program could lose that. Right now, it's clear that if they become an employee of the district that offered them that incentive, they'll lose that incentive. But now it's any job as an independent contractor with that district or as an employee of a third party working with that district. So it kind of reflects post-retirement in that sense. And last but not least, the leave of absence definition was updated, and Nicole is going to spend more time in depth on that later on the agenda, so I won't go into it right now. But I do see there is a hand raised. So I'll pause for a moment.
Hi, Chris Uncle from Service at Retirement.
Yes.
Just to kind of back up a little bit when you were talking about sick leave and the fact that if they earn sick leave under PERS, that sick leave goes to PERS. If they earn sick leave under STRS, it goes to STRS. Is that going to, because right now as it stands, if we don't let them like report to both systems. However, if they do choose to say they earn sick leave under PERS covered employment, and they choose to report it to us, but not to PERS, is that still going to be allowable? Or is it going to be, no, you earned it under PERS, it has to go to PERS. You earned it under STRS, it has to go to STRS.
That perspective, or that piece of it hasn't changed in the law. So it's just a matter of clarifying your first point, which is that if they did use it in CalPERS, and as an example, maybe it's in San Francisco's retirement system, we just wanted it to be very clear they cannot use that sick leave in two places.
Okay, thank you.
Of course. And I see a question in the Q&A. Oh, it looks like it got answered. Okay. Is there anything outstanding? As for what I just went through, just as for written materials, these are all covered in the analyses that you've received in the past as materials for EAC, but also they're on our legislation page on CalSTRS.com. So that's a write-up that you can find there. I don't know if anybody from Mass wants to address whether or not they'll be maybe having some of these things highlighted in a newsletter. There, so like I mentioned, will be directives and circulars to some of these specific pieces coming up as we implement.
There'll be more on that from Nicole when she does her presentation as well.
Great. So all part of the implementation process. Okay. Any other questions on the housekeeping legislation from 2020? I'm starting to get confused about what year it is. And for 2021, I do want to let you know, a lot of times this is the moments where we go over language for housekeeping in 2021. We will have a bill. The provisions as they are right now, a lot of them are taking care of drafting errors from this omnibus bill, AB 2101, and the other two really don't have an impact on employers. So I didn't bring that to you right now, but we'll make sure to go over it in February. And I see another question with the hand raised.
Joycelyn,
Yes.
this is Ramona with Stanislaus. I just wanted a little clarification. If the sick leave was earned under classified service, but they're not retiring with CalPERS, or maybe they've refunded whatnot, they can use that sick leave that was earned under that classified service with CalSTRS, and it's not going to show as excess?
I actually don't know the specifics right now behind how those are reported to one system or the other, if you get to maintain that, if you move to a CalSTRS position, but this law doesn't change anything about that, about however it operates currently. Okay, we'll go to, and I mentioned for the 2021 housekeeping, so I'll see you in February with the language on that. And then if we can go to the next slide, actually 2 slides forward. For 2021, we're also looking at this legislative proposal, which we've talked to you about in the past, so the Statute of Limitations, and I actually have an update from this slide, so the slide is out of date at this point in time. We are still seeking feedback, so that's what we're doing today with you. We had a couple meetings yesterday, we have meetings coming up next week, and so we continue these conversations on this proposal, and then John Meredith-Simkovic will be talking about regulatory proposals, but the Statute of Limitations proposal is one we're looking at. We are planning to take this to the board in December, so that is the update, and they will make the decision whether or not they want to sponsor legislation in 2021. And we'll go to the next slide. And so, as you know, 2 main goals for the legislation, and we want to provide equity to our members who find out that they have an overpayment and that their benefit is going to decrease, and that was through no fault of their own. And so under current law, if there's an employer error, if we start collection within a certain time frame, so 3 years after discovery, we collect the entire amount from the member. Versus if it's system error, CalSTRS error, we only collect back the 3 most recent years. And so there's some lack of equity there that we want to try to fix with this proposal. And in doing so, we would be more in line with CalPERS, and I'll get into those specifics in a minute. But then the other piece, and just to remind you that included in the materials for this EAC meeting, you do have the draft language. You can see Education Code Section 22008 is the main statute of limitations proposal right now. It's a very confusing statute, and it kind of combines that statute of limitations on actions versus collections, and obviously the prerequisite corrections. And so we are peeling those sections apart, and that's how we're going to clearly establish CalSTRS rights to correct benefits and then recover those overpayments. Okay, and I think I saw a question come up. So do I need to answer that? Okay. Next slide, please. So how we're going to find that equity through this proposal is that regardless of who causes the error, if it's not the fault of the member, we would be collecting the 3 most recent years from the member, and then the balance in the case of employer error from the employer. In case of CalSTRS error, it would remain that we would write that amount off. So that first bullet there, kind of with the sub bullets, explains that. And then we do have, since there is this new piece of collection from the employer of anything more than 3 years, overpayments that go beyond 3 years, then we have the specifics about the amount being due within 30 days, and then late payments being subject to regular interest or withholding from school funds. So that is also specified in the proposal, and you can see that in the language. And next slide, please. And just to let you know what we've seen in the data, kind of on what that looks like from an employer perspective on the cost front. So we've taken data for 5 fiscal years and tried to focus in on, this is member-only benefits. So this is not everything, but member-only benefits. This includes, I believe, and John can correct me if I'm wrong, but these could be CalSTRS errors or employer errors. We weren't able to separate those at this point in time with the data we have, but it shows what employers are responsible, would be responsible for if we were to collect that, anything greater than 3 years from the employer. So you can see the aggregate annual recoverable from all CalSTRS employers was $2 million. The annual percent of employers with recoverable overpayments was 20%. Percent of employers with recoverable overpayment over 5 years is 45%. And then the mean overpayment recoverable from employers, this is the average, would be between $6,000 and $7,000. And the median, so this is where there's 50% more than this and 50% or less than this, would be between $300 and $500. And the average annual maximum recoverable from one employer that we saw in those 5 years was $250,000. And that was a pretty big outlier at that point in time, but we wanted to point that out. Okay. Let's see, the reference code for overpayments. The education code I referenced was for the statute of limitations, and that's Education Code Section 22008. The code sections that we are amending in the draft language, that's the first one you'll see in the materials that you're given on page 1. There's 24616, which discusses overpayments. We're adding 24616.2, which is where 22008, we maintain the statute of limitations for actions. 24616.2 is the new section. That's the statute of limitations on collections. And that's the one that specifies in subdivision A, we're collecting the 3 most recent years from members. And then says who we're collecting from for employer error, member fraud, and CalSTRS error. And then there are additional sections that follow for directions on how we calculate the amount collected from employers, 24616.5. And then there are some cash, 24617 has the percentages that we can collect. And then there are some cash balance sections. Now, as we continue to collect feedback, just one thing I'll point out is that we may be taking all of those sections out of cash balance and putting them all into the sections that are under the defined benefit program with reference to cash balance, but as an example of changes that may still occur. That is The description, statute of limitations, a little bit more in depth on the potential costs perspective than we had last time, but I want to see if there's any questions.
Don't see any raised hands, Joycelyn, and there's no Q&A in the chat, so I think we're good on that. If you think of questions for Joycelyn, you can hang on to them till the Q&A at the end of the meeting too.
Sorry, Kim, not to interrupt you, but again, because of the detailed nature of the legislative report, the information is available through the CalSTRS website. So we would definitely encourage folks to make sure that you want to pull down any of the detailed language and any of the specifics, that we go to the CalSTRS.com website for that information.
Perfect. Okay, so moving on to regulations update with John Meredith Simquick.
Sorry, hello everybody. Thank you. John Meredith Simquick, Manager of Governmental Relations, here to present you the latest and greatest on these draft regulations that we've put together for employer audit appeals. Last time we shared with you a bulleted list of kind of the changes, and I've got an update to that for you, just a review. So this is again upon direction from the board. We formed a drafting team to draft these regulations to solve, and I'll get to the next slide to get the intention of the regulations, but we're currently soliciting feedback from stakeholders. As Joycelyn mentioned, we're having several meetings and along with this one, and so we welcome all the feedback that you can provide to us. We really appreciate it. And we've received a lot so far, and I hope you'll see some of the changes that we've made based on that feedback. Next steps, we're going to make any additional changes, and then we're going to bring the regulations to the board in January is the plan right now, to ask them to approve us to move forward with a draft set of regulations, and then we would be initiating the formal rulemaking process at that time. At that time, then the board we would put it out for comment for a 45-day public comment period, and then we would need to bring it back to the board, make any additional changes. If none, ask for their approval for final adoption. If there are changes, then we go back out again and we do it all over again, and we have a full year to complete that whole process, that iterative process of the regulations. Next slide, please. So the goal of this package, and the biggest goal is we wanted to create the opportunity for our members, all of our members, to have administrative remedy rights. So currently, the way our regulations work out and the way the process works and timing and the constraints of the current regulations make it so that when there's a systemic population, we actually can't provide them with the same administrative remedy processes as the sample population. So they don't get the opportunity to request an administrative hearing in front of an administrative law judge. And so the goal here is to, that we present that problem to the board, and that's what they asked us to fix. So the goal here is to provide equal and consistent treatment of the sampled and systemic members. And then it's really about avoiding any delays and having timely corrections so that we can reduce any potential overpayments and have the resolution done in a timely manner. And then also in recognition of the increase in appeals that are going to result from this, that are necessarily going to result from this, we want to make sure that we can provide for a process that allows us to have one adjudicatory process is what we say. So each finding that we have in an audit, if there are multiple people who are asking for a hearing of that or disagree with their application of being involved in that finding, we can move them through the process together as a cohort is the purpose here. Next next slide, please. Thank you. Our draft regulations would do the following, and I'll try and highlight a little bit of a change from last time so that you understand where we've been shifting. So we as last time, we removed the requirements to inform the sample population of the draft or preliminary audit report. That's in order to, so we treat everybody equally. So everybody's going to find out about this at the same time. In order to provide some of that notification, though, we are in our current draft of the regulations, we are requiring the employer to inform employees and former employees that the employer is subject to an audit. The previous version of the regulations actually had a provision where it would require the employer to notify individual members prior to actually making a correction. We heard a lot from you folks about that and others, and about how difficult that could be as far as former members and retirees and others, and the communication that would entail. And also we recognize that could actually delay the corrections from occurring, which would be against the spirit of the intention of the regulations as far as having timely corrections. So we tried this approach as a replacement for that. I will note we are hearing feedback about this approach as well, and we recognize that there might be some problems with this approach, and it would require you all again to basically, the idea here would be you find out that you're audited, and the idea here would be you would inform your employees that you're subject to an audit. And it also has former employees there as well. So we've heard, well, again, we go back to that being a problem as far as trying to find former employees. We understand that. Our intention was not that you would have to go out and find them, but we understand that might be implied by the language. We're working on maybe thinking about an alternative to this, some other way of making sure that people can be notified that there is an audit. And then the latter part of that sentence would be another part of informing everybody, would be to have the employer post the final audit report to their website, the employer's website. Again, to notify everybody of the final audit report. They would then be able to look at that and see in the description of the final audit report, not the confidential appendix that would not be posted, but the final audit report. They could look at that finding and decide whether or not they may or may not have been part of that finding at that time. And that's how they may be able to engage at that time. But again, we wouldn't be notifying everybody until we know who everybody is the issue with that. So I can actually maybe stop there before we go into if anybody has any questions about that change and what that entails. And if not, I can move on, and I'm sure we might want to come back to that. So I'll move on. The next slide, please. Thank you. So then we also shifted a little bit from the last version as well. We are not explicitly requiring corrections, although they are required, and we may reference other statutes saying that this regulation, nothing changes the requirements to correct and submit correct data as is otherwise provided under the law. But the crux of the requirement here is that we get this list of systemic members. So we have 90 days in this regulations package for the employers, for you to submit a list of all members affected by that audit finding. So the final audit report comes out, employer posts it to the website, submits a list to CalSTRS, and it's at that time where just the employer has this information. The employer would be able to, if they disagreed with a finding, the employer would request an administrative hearing within those 90 days. We get that list in, and then we go to that next bullet where CalSTRS then is able to know exactly who is subject to the finding. So then we can provide that equal due process appeals rights to everybody affected by the finding at the same time. So we would be then submitting or mailing what we call a determination letter to all members affected by the finding. And we'd be providing those members with the opportunity to request an administrative hearing within 45 days of issuing that determination letter. recognizing that we may not get a complete list, we have retained, we had 2 penalties in the previous version, you may recall from the last conversation. The one penalty had to do with corrections and that list, and it was actually intended to kind of start tolling if we didn't get those in on time and be like a daily type penalty. We removed that because of complexities and feedback. But we've retained, in order to still retain some incentive to get that complete list in, we have retained 1 penalty from the previous version, which would be creating an additional employer penalty to recoup any costs associated with an appeal that might come from someone who was not part of that original list, but then later has an adjustment because of a correction that comes in later on down the road. We would need to recoup those costs. We weren't able to move them through the process as we were everybody else, as I mentioned earlier. And so to both incentivize that list to be complete and recoup any costs for any administrative request for administrative hearing that comes in after the fact, we have retained that penalty. Next slide, please. I think those are the provisions, the main provisions that we thought that you as employers would be most concerned about. There are additional provisions, and I believe you have the language. And if you have any questions about any of it, please contact us. We'd love to hear from you, and right now as well.
Thanks, John. We'll give folks a minute. I did want to just make sure that the timelines are clear for both the statute of limitations, which is going to go before the board. We've called a special meeting in December. So that conversation and discussion with the board, whether to move forward with that legislative proposal, will happen on December 9th. And then as John mentioned, the audit regulations is currently slated to go to the board for their consideration in January. The board dates are January 27, 28, and 29. At this point, we don't know which day, but it will be part of the regular meeting, and we'll get approval to move forward with the promulgation of the regulations and start that formal process, which again, as John mentioned, will take a year. So this is the start of well, I shouldn't say the start. This is a continuation of an ongoing informal dialogue, which would then be potentially formalized by the board with their approval in January. So I am not seeing any hands, and
Got a Q&A though. Talina is asking, can you please explain the purpose of posting the audit on the district's website? John, do you want to?
Yeah, I'd be happy to. Thank you, Kim. So the purpose there is to provide earlier notification to the members. So if we don't have any of that notification, then we don't know everybody who may be affected by an audit. The employer does. We only know the sample population. We're not providing them any notification anymore because we have to provide notification to everybody at the same exact time. So if we didn't have any requirement or posting of the final audit report, then the first time a member might be hearing about being in part of an audit would be that final determination, not final, but that determination letter that comes out and says you are part of this audit, you've been affected by this audit. We want to provide them with a little bit more early notification so that when that employer receives that final audit report, then if there is any sort of interaction that needs to be done with members and employers at that time, then that may be able to occur and whatnot. But it's really just to provide that earlier notification.
Thanks, John. I'm not seeing any hands raised or questions. So thank you. I think again, John and Joycelyn will continue to stay on if other questions come up through the course of discussion this afternoon, but we'll move to Nicole.
Hello, everybody. Good afternoon.
So I have hopefully some good updates for everybody. To quickly chat about or just respond to, I think Joycelyn asked if we're going to be putting out any additional communications around the implementation of our technical housekeeping bill, or excuse me, the housekeeping bill, AB 2101. And the answer to that is yes, of course, we will be. We're drafting a directive right now that really touches on almost everything that Joycelyn reviewed, since those are really the provisions that like she mentioned, we think impact you guys most. And then we will also be putting out some separate circulars and directives specific to some of those provisions. For instance, one of them is the leave of absence provision. So first, be on the lookout for the AB 2101 directive, and then there will be others. But so like Joycelyn mentioned, I wanted to go into some of the specifics around leave of absence for you guys so that you could kind of get an understanding of what's to come here. So as I think everybody in the room knows, there was some issue. I don't know if it was, that's not the right word I like to say, but around leave of absence and the circular that we had put out, I think maybe around February, maybe a little bit earlier than that, this last year. And we heard a lot of concerns, and with that, we were able to get some language in our housekeeping bill this year to correct the definition of leave of absence. So like Joycelyn said, AB 2101 becomes effective January 1st. However, this particular provision for the definition of leave of absence, which for those of you who want to know the code, it's Education Code 22144.3. And the amendments that were made to that particular provision are retroactive back to 2016. So basically prior to 2016, we never had a definition of leave of absence. It was only contemplated in our definition of creditable compensation, and where it mentions that certain leaves like sick leave, vacation, and other employer approved pay leaves were creditable. In 2016, we put forth the definition of leave of absence as we had been interpreting it up until now, obviously. And so that interpretation was that certain leaves, and in most of the time in particular, paid administrative leave was not creditable during that time. And if you had reached out to us with a settlement agreement or a question between 2016 and 2020, we more than likely told you that paid administrative leave was not creditable, and therefore I'm assuming you didn't report it. With 2101, I do that every time, the bill, again, we're going retroactive with our previous interpretation. So the idea now, I know it's a roundabout thing. So the idea is that any employer approved leave of absence is now creditable, and it is retroactively creditable back to 2016. So what does that mean? Going forward, any employer approved paid leave of absence is creditable. Go ahead and report it as you would any other paid leave. The member will get service credit for it. It'll get counted just like any other leave of absence. What we also need you guys to do is for any leave that was taken and paid for between 2016 and the end of this year, so December 31st, 2020, we will need you, this law now makes that service creditable and that compensation creditable, and therefore we need you to report it. We understand that there are some potential issues with this. As with any kind of retroactive legislation that impacts creditable compensation, we get that many of you have already paid out this type of leave to your employees or to potentially your previous employees, because they might not work there anymore. And more than likely you did not take, well, I would assume you did not take member contributions out of that payment. So in order for you to report today, you don't have the member contributions for that.
So what I can say is the law still is clear now that the service is creditable, the compensation is creditable. And so all we can really ask of you for at the employer realm right now is for those individuals who you did not take member contributions, you did not report that service and that compensation to CalSTRS between 2016 and 20, that you do your due diligence and make a good faith effort to contact those employees where you can, and let them know that, at the time the service was not creditable and they did not receive creditable service for it. Nope, excuse me, they did not receive service credit for it. And now there's a change in law which makes that compensation creditable, and they would have to. We can't force this, but the idea is that they should be paying you as the employer the member contributions there. There's nothing in this law that is CalSTRS requiring that employers pay for or cover the member cost of the contributions for this service. So we are not expecting employers to report service and only like the employer portion of contributions. So the idea there would be, if it's not a full line, if it's not a full contribution, if you can't get all the contributions to us, then contact us and let us know and we'll work with you on that. I see there's a question here from Raina. 2016 is more than 3 years. So wouldn't the employer be on the hook? No, because this is actually a change in legislation. So this is not an error on anybody's part. This is a change in legislation which impacts something that creditable compensation, really. I hope that answers your question, Raina. See something else coming up. Rosanna, so employer approved paid leave that results in the employee being released at the end of the leave would also be still reportable, or does the release at the end of the leave reverse reportability? So no, it does not. Yes, that is still reportable. There's nothing in the law that talks about the intent to return. It's just an employer approved leave of absence. So just like they were on any other kind of leave, if they were on vacation and just running that out with the intent of, not coming back, or same thing with sick leave, we don't make that judgment call. It's just that they're on an employer approved leave, and that is creditable.
There's one hand raised as well.
Oh. Anna, I see your hand raised.
Hi, yes. Just a question. So if we cannot, let's say we do contact the employees, letting them know that now something is reportable, but we cannot collect those employee contributions. Are you saying that there's a possibility that we can still report it and work with you somehow, or?
Well, yes, there is a possibility. I mean, the idea there would be then that you would probably, the employer would have to, for lack of a better term, pony up the member contributions. And we're not asking we're not asking counties, we're not asking districts to do that. That would be something that you guys would have to discuss internally with your governing board and your chancellors and presidents and principals and all those types of things. That's why we're saying contact us, and we'll talk you kind of through that a little bit, because the bottom line is we're never going to ask for, and I don't even think our system allows for like partial reporting, right? You couldn't just report a line and only provide the employer portion of contributions. So that's not even an option. So we basically, in order to report the line, you would need to be able to remit all of the employer and member contributions that are due there. And again, like I said, we're not saying that we're requiring you as the employer to cover for or pick up that member contribution. So, I was just thinking this through a little bit, and my suggestion, and again, this is not in law, this is just my suggestion, would be if you do reach out to those individuals, and they for some reason can't pay it or don't want to, or whatever the case may be, you may want to get that in writing so that you have it for your own purposes in case something, later on comes down the line. I don't think it would be something in an audit. I can't say for sure. But having that documentation is always a good thing to help keep in the members' file, in their employment file with you guys. Did that answer your question, Anna?
Yes, but that was my concern as far as, the likelihood of getting these contributions from an employee or even the employer, I don't think are very high. So we will be left with unreported earnings or unreported service for an employee that can potentially be a problem in an audit later on. Somebody's been reviewed, their short service credit, 5 years from now, 10 years from now, who's going to remember, that this happened? And there is no tracking except for that, if we do keep a letter in the employee file.
We are trying to make sure that this is not something that gets lost in the shuffle 10 years from now. Trust me, I do the same thing. I want to think about our future selves and how to help mitigate some of these questions that might come up. But we are definitely making sure we're going to be working with our audits team, our audits division, to make sure that they understand this concept, that this was a law change, these types of things. And there's only so much that we can do, and there's only so much that you can do during this time. We know that that's part of the problem, part of the issue, part of the concern with implementing changes in creditable compensation retroactively.
Okay, thank you.
You're welcome. I see there's some questions here. Vina, if the members do not respond to our request for collecting contributions, do we need to take any other action? I can't tell you to take any other action. If you wanted to, as the districts or the counties, that's up to you guys. I would say at that point, though, I'll reiterate my point of just contacting your rep, and we can kind of talk that through on what should be done on the reporting side. Hope that answers that, Vina. Renee, is CalSTRS going to waive P&I for those retro payments? Hold that thought. That's part of my next piece to this. And then Rosanna, so can the employer hold off on reporting previously unreported paid leave if the members refuse to pay their portions of contributions? In a nutshell, yes. But this is, if you've reached out and they're refusing to, this is where I want to reiterate again, contact us, contact your employer rep, and we'll kind of walk through the options that everyone can go through. Okay, Renee, I'm going to get to your question here in a second. So penalties and interest. Yes. Okay. As we all know, anytime that there is a retroactive reporting of lines and retroactive remittance of the contributions, P&I is going to get assessed. That's just, our system is set up that way, it will get assessed. There is a regulation in our penalties and interest regulations, which allows for when there is a change in legislation that impacts creditable compensation, for the penalties and interest to be waived. You will still have to dispute it, but it allows it to be waived as long as, and here's the caveat, as long as the reporting and the money are reported and remitted within a certain time frame. So for this particular issue, if you can report the retroactive leave before March 2nd is when it's due, and then it would be considered late, and penalties would be assessed as of the late date on March 17th. And for all of you guys feverishly writing these dates, this is going to be on the directive that we put out specifically for leave of absence. So you will see this. So reports, the reporting would be due and considered late after March 17th. And just like any other remittance for contributions, 95% of the amount would be due on February 5th, considered late thereafter. And the remaining balance would be due February 22nd and considered late thereafter. So if you're able to report this leave and remit the contributions within those timeframes, again, you will still get assessed the penalty. Our system just automatically does it, but you will be able to dispute that and provide the information that we'll put out in the directive And our contributions team, Cassie and et al. Will look at it, and the law allows for those to be I don't know if waived is the right term, but disputed and waived. I don't know if that's the right term, but you get what I'm trying to say. And then the other thing is we would ask that if at all possible, if you could submit these retroactive leaves on a supplemental file, that would be very helpful. We get that not all counties or not all report sources use supplementals, but it just makes things a little bit easier to be able to really consolidate and identify what lines are specifically being reported based on this change in law. And it'll help our contributions team be able to really hone in on those are the penalties that are disputable and waivable. Let's see, I see some more questions. So can the employer, oh wait, you already did that one. Doreen, what is the employer directive that specifies the types of paid leaves that were not creditable in 2016? There really isn't a directive. I believe we did have a directive on the bill itself from 2016. I believe if you go back and look, it's 8963. I'll have to double check on that. We can send that out afterwards, but that's really just a directive that talks about all the different provisions that were part of that bill. And then we did have a circular that we put out recently, earlier this year, on leave of absence, but you won't find that because we posted it and we promptly took it down. So I don't believe you would be able to find that if you went online to look at it right now. And like I said, for this new iteration of leave of absence, we were just waiting for this meeting to make sure that there weren't additional questions that came up that we wanted to address in the directive. So we're really hoping to get that posted pretty soon. I do see, Lori, you have a question. Real quick, I want to point out, we do already know some of the settlement agreements that some of the counties have submitted to us during that time, where we had said that the leave of absence wasn't creditable. And so we have started to, and we will reach out to those counties specifically to talk about those specific cases. So if we haven't gotten to chat with you yet, we will, and we can talk one-on-one about the options to report, basically. Okay, Lori, I see you have your hand raised. You're on mute. There we go. Oh, nope. Hand down. Hopefully I answered your question then. Okay, there's another question. Is there any issue with the employee contributions being post-tax? I don't think you can, I don't think we have any I see what you're saying. I don't know if there's an issue with that. Julie, we're going to have to get back to you guys on that piece. I mean, at this point, my understanding is that there is no way for a employer to report post-tax anymore. It's all pre-tax. No, what am I thinking? Okay, I'm going to stop myself so I don't get myself in trouble. We will get back to you on that one, Julie. Okay, I think we're good there. So the next topic I wanted to bring up is our favorite topic of late, training as creditable service. So we've talked about this the last couple of EACs, and I see another question. Lucinda, I'll come back to your question here in a second. So training as credible service. The last couple of EACs, we've talked about this. And I just wanted to reiterate, because I think some questions are still coming up, that as of now, as our interpretation, that the taking of training is creditable service, and the compensation, that the extra compensation that's paid for that training is also creditable compensation as salary. So we would expect that you would be reporting it as an additional assignment. And what that means is, because it's for service, it's going to create service credit. And if this individual, or if your employee is already a full-time employee, earning their full-time salary as, for instance, just a teacher, not just a teacher, that was as a teacher, as an educator, that the additional payment for this taking of training would more than likely eventually roll over to DBS, to the member's DBS account at the end of the year. So we've also heard loud and clear that you guys need this information in writing. So we are in the process of drafting up a circular, a clarifying circular around this, so that you can provide that to your districts, because I know that a lot of counties are having, they need that information in writing for their districts. Okay. Can we see the questions before they are answered so we can better prepare to take notes? Teresa. Not exactly sure what you're asking. Can we see the questions before they are answered so we can better take notes?
Are we taking them off too quickly? Sorry.
I think that might be the issue, Nicole. I think the questions, as they're being answered, they're being moved into the answered tab. So in the Q&A, you'll see there are, it might just be my presentation, not others. But there's 3 tabs, one for open questions, one for answered questions, and a tab for dismissed questions. So the answered questions are where there's I'm hoping it's not just me, be able to see those questions.
I think they see the open and answered ones and not dismissed, because dismissed.
Teresa's saying they're only seeing the answered questions.
So everything that we've answered even verbally would end up in the answered questions, but we'll try and make sure that we're also repeating the question before we answer them.
It looks like Rena has a question.
Yeah, I just wanted to comment on that. So for me, I only see all questions and then my questions, and all questions shows up after you've talked about it or answered it. So we are seeing the questions after it's been discussed. They're not popping in as people are typing. I think that's what she was trying to say.
That's pretty much a technical aspect of how this works. So the only, we don't necessarily know someone's going to answer a question live until they make that decision to start having that conversation. And so that's when they get moved over into the questions. So I think it's just a little bit of a timing issue, but hopefully as we repeat the questions, we're answering them.
So Nicole, if I can make a comment about what you were just discussing for the training and creditable service.
Yeah.
We're really in the midst of a dilemma with that. So I don't know if your guidance or circular can provide any information related to the contributions that we're literally holding that we didn't report because we were told no, and we've told the districts no. Should we now change our mind and go ahead and report? But at the same time, we've now not treated everyone the same because some have already been returned to the employees. We're not in the middle of it. It's already complete. So in some cases, it's already been returned to the employees. So would the employer be on the hook if we wanted to report? And then in other cases, we could just kind of turn around and give it back, or excuse me, report, go ahead and report it.
So I would say go ahead and report it if you have the contributions and you've been holding on. I would say that's go ahead and report. For the contributions that you may have returned already, I would actually almost say to follow kind of the same idea as I just talked about with the leave of absence, is if they're current employees of yours still or of the districts, reach out to them and just say, you know, hey, if this is creditable, go ahead and give us back the contributions. I know that that's not a the best solution. And I know that's part of, the issue.
Especially when you're talking about like 10,000 people. I mean,
yeah,
you're not talking about just a handful of people.
Yeah.
And so you're talking about a massive amount of work and monitoring and tracking, and not everybody will be treated the same. So it goes kind of back to what Anna was saying with the other issue is, how do we keep in a folder somewhere that, yeah, for you, it was creditable, for you, it wasn't, it's just so muddy. So I wish there was a way to kind of have like a date to say from this date forward, it's now creditable. I don't know.
We can take that back and talk internally about something like that. I can't make that determination or promise
Sure.
right here for you guys. I absolutely understand what you're saying. I get it. And I sympathize, empathize, all the thighs. I will definitely bring that back and we'll touch a little bit more on it, and we can maybe send an information update to the entire group, or we can add it into the circular that we're drafting so that it's the information is out there.
Thank you.
Just to clarify, Nicole, I want to jump in and just clarify what we're not saying that anytime someone took training, it's now all of it is creditable. The service still has to meet all of the other requirements of creditable service in order, and the way it's paid does matter. And I think we're starting to get into Cindy's question here in the Q&A, Nicole, if you want to take a look. But what we're saying is that before, where we were saying taking of training was not considered creditable service alone. Even if it were, it still has to meet all of those other requirements. So those tests still apply. So don't think we're asking you to go back and now everything just report to us.
So I'll go back to another Lucinda, and I'm assuming that might be Deepa. Has a question, but Cindy, so is training time credible for both 2 at 60 and 2 at 62? For instance, if instructors are working on training requirements to teach online, it may take longer than a single month. If a lump sum stipend is paid at the end of the training, are 2 at 62 members still eligible for creditable service relating to this training? So that is the age-old issue of, this. Is it a limited term payment or not? And at this point, because we're saying that the taking of training is salary because it's for service, it's doing something additional, then the way that we generally look at salary is as long as you're paid for the service in which, like the service that you perform, then we don't consider that a limited term payment, which means that it would still be creditable for 2 at 60 and 2 at 62 straight to directly to DB. I hope that answers that. Well, I'm not gonna go there. So I think there's a question. So what about instructors who provide the training to the instructors? Is that creditable? Yes, that is creditable service on its own. I believe it's in one of these. I don't have my book open right in front of me, but yes, that is creditable. So basically the giving of training is creditable, and also the taking of training is creditable. And both would be, I'm assuming, would be an additional assignment. Ramona, can this be found as an audit item later and can systemic for the employer? Potentially. This is, again, we're working with our audits division, our audits teams, to make sure that they understand these nuances that are happening right now, so that they can keep them in their book of laws and interpretations and apply them appropriately. So we're definitely working with them on this. I can't say for sure that someone might not get audited to it at a later date, but we're trying our best to make sure that doesn't happen, or that it's explainable if it is audited to. Rosanna, we were told that taking training was not creditable since they were not performing service, since they are not actually putting on the training. Right. So that's the clarification in the interpretation that we're trying to make here. It is creditable. It's creditable service because it's the work of the teacher who's taking the training, the counselor who's taking the training, the librarian who's taking the training. It's part of their normal duties to take training. So that's how we're viewing that. Is there clarifying info? Is there clarifying info that will be providing to help this new training interpretation? Is there clarifying info? Again, a circular. We're going to put out a circular on this, so I don't know if that's what you're referring to, clarifying information, but that's we're planning on posting that pretty soon as well. Janelle, will the circular differentiate between training specific to employees' job as opposed to optional professional development? So maybe, my answer to that is maybe. We haven't fully finished the circular yet. I think it's probably a good idea for us to talk a little bit about professional development days. And so we'll see what we can do about that. Okay, I do see some hands up. Lucinda, if you're okay with your question about the February, March, like a short time, if I can come back to that after we finish this piece, I hope you're okay with that. But I do see your hand up, so go ahead and ask your question, or whoever's next. Sorry.
Hi, do you hear me?
I can, yes.
Hi, Nicole. Hi, everybody. Still have a little bit of confusion on the training when people are attending. I'm so sorry. Because majority of the time, if not all the time, the training amount that's paid isn't related to any type of salary or salary schedules. It's, hey, go to this training and we'll give you $100.
Right.
Okay, and then you're saying it's creditable for both 2% at 60 and 2% at 62. Then you also made a comment about it going directly into DBS. We can't report anything directly into DBS. That's done at the end of the year by STRS.
Correct. Let me clarify. It is creditable to DB. You would report it to DB for both 2 at 60 and 2 at 62. In both cases, if these individuals are also full-time in their normal duties, like I'm just using the example of a teacher, they're a full-time teacher, and then they go take this extra training and they get paid the $100, you would report that $100 as an additional assignment to DB. And at the end of the year, again, because members can only earn 1 year of service credit in their defined benefit account, anything, any contributions associated with service in excess of that 1 year of service credit would roll over into DBS. We would not have you report directly to DBS for anybody. This is reportable to DB.
Okay.
Does that help?
That helps, yeah, because you threw the DBS in there and I was like, wait a second, we can't report that way. So any type of training they do, regardless of what they're getting paid, how they're getting paid, one-time payment, it's creditable because they're taking the training.
Got it.
Okay, perfect. Thank you.
You're welcome. I think, Anna, you have a question. You have your hand up.
Sorry, I realized I never asked myself. I almost finished asking my question.
It happens to the best of us.
I got a little confused with the credible for the 2% at 62, even if it's a lump sum and whenever paid. I thought it had to be paid as earned. I know some districts say you have until this day to complete your training, and then afterwards we'll pay you. Well, that then is not paid as earned for the 2% at 62. That would not be
That's a good point. So the idea there is that if someone is taking training, and let's say, I mean, I guess maybe this is just my assumption, so thank you for calling me out on that, that usually trainings are like 1 or 2 days. They don't generally go over like multiple months, right? So yes, you're right. If there was training that someone was taking over multiple pay periods and they're only going to get paid once at the very end of it, just like any other type of service, then that is where it would not be creditable for 2 at 62s, because you're not paying it in every pay period in which the service is performed. So if we think of the taking of training as the performance of service, as long as the employees are getting paid in every pay period in which that service is performed, it's reportable to both 2 at 60 and 2 at 62. You are correct in that if a training is being taken, that service is being performed over multiple pay periods, 2 at 62s would not be creditable if it was not paid in each one of those pay periods.
Okay, thank you.
I hope I didn't just muddy that for everybody else. Okay, looks like there's another question. New member training is not creditable if it's paid in one lump sum, ? New member training is not creditable if it is paid in one lump sum. I think my question there would be, I need a little bit more information about what type of training what new member training means, and whether or not they're considered employed, that type of stuff. So maybe submit that question, or we can kind of come back to you, excuse me, with the answer to that one. I feel like I just need a little bit more information to kind of get what you're going with that one. Valerie, when does training being reportable take effect? Now. Takes effect now. And this is one of those things where I think this is the question that Lucinda was asking, or somebody. What about or maybe it was Anna who was saying, what about the contributions for previous training that we had already said wasn't credible and wasn't reported? What should we do? That's where I would say it should be reportable. Please report it. Figure out a way to get the contributions back from the member. And if you have issues with that, contact us and let us know, and we can talk it out. Okay, so seeing no more questions there, Lucinda, I'm going to go back to your question on the leave of absence. You said February, March seems like a very short time frame to collect contributions, especially in this covers a number of months. Yes, you're right. It does seem like a very short time frame. I get it. However, that's what the law allows for right now. That's what the penalties and interest regulations allows for if you do not want, or if you want to have those penalties waivable. Again, sorry, Cassie, if I'm saying the wrong word. You can always report after that. And it's just that our law doesn't allow us to waive those penalties at that point. So the penalties would stick. So that's the caveat there. Lucinda, I hope that answered your question. Okay, Alma, if the training is paid on a supplemental payroll, is it creditable for PEPRA members? Example, the training was done in October, but it was paid on the supplemental payroll paid on November. Is it creditable for PEPRA members since it isn't paid in the month the service was provided? So Alma, is your question really just like how people normally get paid? They get paid the month after they actually usually perform the service. I think that's what it is. If I'm wrong, I see a yes, great. That's just normal. We wouldn't look at that. We get that someone might do something in September and then they don't get paid for it until October. That's a normal payroll issue that we don't generally look at that. As long as you're giving us the reporting, and that is the payroll for the previous month, because again, reporting and contributions are due within 30 days after the month closes. That's where we would be fine with that. I hope that answers your question. Virginia, if we paid a stipend to instructors who complete training for converting classes to online format due to COVID, is this creditable for PEPRA or Classic members? I would say we would need to look at the duty statement or the understanding of what that type of training is. But I would say in general, this is if we pay a stipend who complete training for converting the class. Yes, I would say they're still taking training, and it's part of their job. They need it to do it's part of their teacher job, right? Taking training, they're getting money to do so. It would be creditable in just the same way that I was just talking. So if it's paid in every pay period, it would be creditable to PEPRA members as well as the 2 at 60 Classic members. Virginia, I hope that answered your question as well. Oh, I just keep on coming. I knew this was my day for these questions. Cindy, different reps, different presenters at EAC, and different eyes looking at the ed code lead to a huge disparity in what is deemed creditable. Very frustrating for employers. This is why we always ask for everything in writing. I understand the frustration, Cindy, and we hear you, and we are looking at different ways to provide this information to you in writing. I know the next question is going to become, when do we get another creditable comp guide? I can't promise anything like a creditable comp guide, but we hear you, and we're trying to figure out a better way for you guys, a better way for us to communicate with you. Okay, I'm going to move on to my one last little. Am I over on time? Anybody? I haven't really been paying attention.
You're fine, Nicole.
Okay. The one last thing I just wanted to bring up was we got a question through the advisory committee in between meetings here, and the question, excuse me, the question came around. I already kind of talked about it a little bit, but like if someone is receiving is a full-time contractor receiving full-time salary and they have an additional assignment, are those additional duties only going to DBS, or does the extra service count towards a benefit in final comp? So again, like I mentioned before, members can only receive 1 year of service credit in defined benefit. An additional assignment is for service, right? So they're doing something else. So as it's reported as an additional assignment, it would be reportable to DB. It goes straight to DB, and it counts as service credit. But in this scenario, if someone is already receiving full-time, their full-time service credit from their full-time contracted employment, then at the end of the year, you as employers don't have to do anything about this. You've reported it to DB, but at the end of the year, CalSTRS will look at our members' accounts, and anything in excess, any contributions that are in excess of that 1 year will roll over into the members' DBS. So it will not take, in that situation, it will not be considered in a member's final compensation benefit calculation. Where that additional assignment does count in someone's benefit calculation or final comp is if this scenario is the person does not have a full-time contract or isn't otherwise already working other positions that would get them to 1 year. So if you work multiple part-times, multiple assignments, they can aggregate, they can add up to a year. And if that happens to be part of their final compensation period, we average those pay rates together. And that is how a member's final compensation is calculated in that. So if anybody has any questions there, let me know. Let's see, we have an instructor that work on developing curriculum overtime, and the agreement is that they get paid the hours once curriculum is approved. Would that not be creditable, as it usually takes multiple pay periods? What if we report the hours as arrears when paid? My brain is not contemplating this, like I'm not wrapping around this question.
I think this one is too specific for us to answer in this way. I think this is one of those things that we would need more details. It would depend on 2% at 60, 2% at 62. This one I think is a little bit too much for this venue. And I want to make sure that we leave time for John to do his pension solution update too. So what we're going to end up doing is running into the Q&A time in the end of the meeting. So
fair enough. Deepa, I'll reach out to you after this, and we can talk about this one a little bit more. Jane, one really last quick question. What is the max contributions in the DBS? It's 8% for members, and off the top of my head, I know I should know this, but I don't remember what the employer is. I think it's the same. I could be. I'll get back to you on this one too, Jane. But there is no maximum, like if someone works like a bazillion hours of overtime or additional assignments, all of that would roll over to DBS. There's no cap, but it's just, and you've already submitted to us the contributions. And for DB, we then roll it over to DBS, and that the extra is what we send back to you guys every year, which I know you're all so happy about. But Jane, if that didn't answer your question, let me know. And anyone, you guys can always email me. It's I know I'm gonna chop myself here, but it's N Snyder Nicole, N Snyder SNYDER @CalSTRS.com, and I'm happy to help with whatever questions you guys might have, since I've run over my allotted time here. Sorry, John, go for it.
That's all right, Nicole. I know you love this stuff. You could do this all day, so it's just fun watching you in action. All right, next slide. Great. Good afternoon, everyone. I am John Hammond with the Employer Readiness team. Also with me is Nick Grafton, also with the Employer Readiness team, and he's going to help me with any questions that might arise. And we have a pension solution update for you today. Next slide. As you know, the Employer Readiness team has been conducting readiness visits to help you become ready to use the new system, which will be going live in fall of 2021. And our main audience has been report sources, and we've met with 65% of you so far. So we've made quite a bit of headway, and our goal is to meet with all 92 report sources by March of 2021, as you can see on the schedule on the slide. So that's our goal. So obviously we have some more visits to schedule with the remaining report sources. Now I can tell you that the best thing that you can do to get ready for the new system is scheduling that readiness visit with us. And if you haven't scheduled one or attended one just yet, I can tell you it takes about an hour or two. There are no prerequisites for scheduling a visit. You just contact the Employer Readiness team and start the scheduling process. Our email is psemployerreadiness@calstrs.com. Our team member, Carrie, is waiting for those requests to come in, and she'll help you schedule those. And if you're curious, in the visit, we will give you access to the testing environment, show you how to process files, how to use the system as well, and also where to find training and support, and everything that you need to do well in making the transition to the new system, that we are going to provide that for you in that visit. So please, 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 if you are a report source, schedule that readiness visit with us if you haven't already. And let me just pause there for just a second and see if there's any questions. Okay, I think we're good. So you can see on the schedule an activity called final file validation there on that Gantt chart right there. I want to start expanding on what that is in more detail and how that fits into the overall transition to the new secure employer website. Next slide. We've updated a previous slide to help communicate the upcoming readiness activities in 2021. We've broken up those activities into educational activities and transitional activities. So what you're seeing on the screen right now is the educational activities. And so line item 1 there is education and transition updates on the employer support portal. During this time, it's a really good idea to visit the portal on a regular basis and see the project updates in the revised materials, especially during this time that you see here in 2021, because we're getting really close to go live at this point. Line item 2 is the computer-based trainings. They're available right now, and there's more coming in March. The training and development team has told me that they're going to be presenting in the next EAC on system training opportunities as well. So more to come on that. But again, these classes are available for you now through the employer support portal. And if you are a county office of education, these classes are for you. They're for your districts, for your community colleges, charters. In fact, anybody who uses So Today can self-register and start taking those classes. And so we encourage you to do that. Slide item 3 is assess your training needs. So if after you complete your CBTs and you feel like you need more training, you can always reach out to your employer services representative and request more training. The important thing is that you take those CBTs first, as they will help you communicate to us what it is that you need more of. And so it will help you with vocabulary and functionality, and you'll be able to communicate with us through those CBTs. And so we encourage you to take those first and then evaluate whether you need more or not, and then contact us. So if I could advance this slide, here are the transitional activities. Line item 4 there is file testing and validation. During this time, we would like all report sources to submit production level files in the testing environment, also known as the employer readiness environment. This means that a contribution file, would have all your report units and be reported in a similar monthly volume of reporting lines that you currently report today. And we're asking you to do that in the file format that you think you'll be using at Go Live in fall of 2021. So that's either the new file format, and if you've had a visit with us, you know all about it. If you haven't, schedule with us. But then there's also the option of the current file format that you use today, and sometimes we refer to that as the old file format. So that is information that you will need to relay to us. So line item 5 is the SO user role mapping validation. During conversion, we will be converting all SO users and their permissions to the new SO. Some report sources have asked to see a list that we'll be converting. So this activity that you see right there on that line item is essentially CalSTRS reaching out with that list to verify with you the user list and those associated permissions. So we're giving you an opportunity to kind of check that before we convert that into the new system. Line item 6, the readiness confirmations. Regulations say that at Go Live, the new system of new SO, sometimes referred to it as, you need to use the new file format. However, it also says that we have a waiver process in place where if you think that you'll be using the old file format, which again is the current format you use today, you have to complete a waiver so that we can document your 6-month exemption. And frankly, there are 4 of those 6 months exemption periods for a total of 2 years after Go Live. And we're still working on what this process will look like, but the regulations tell us that we need to have some type of documentation from you if your county essentially is going to be using the old file format at Go Live. Okay, so more to come on that as we get closer. Line item 7 is cut over in the intern process. We're still working out the details of this activity, so I don't have anything really to share about this today. And then of course, Go Live early October. On that day, and we're not sure on the exact day. You've noticed I've used fall of 2021, I've used October 2021. We really don't know the exact day just yet. But on that day, you will click on your SO link to report for that month, and you will be entering into new SO. It's going to be the same URL. And so we just want to make sure that when that happens, that you are ready, you're ready and that you're confident in using that new system, and that you're able to submit contributions with confidence. And so that's really everything that we're doing now, and right up until that moment is really preparing you, making sure as employers you're ready to use that new system. So I just dropped a lot of information, I realize, so let me pause. I do see a question and answer. Oh, okay. Looks like it's just an old question from the previous.
It's okay. I'm gonna recap the training conversation before we end here.
Oh, I see. Okay, thank you, Kim. That's helpful. Okay, well, I think I'm just going to go on then. Doesn't look like there's any questions. Next slide. Okay, here's some basic information that we've been sharing with you, but we want to make sure that you have this. There's the employer support portal URL. Through this site, you can get the project announcements, you can access training, and get all the materials related to the formats, job aids, all those different kinds of things. The employer readiness team email, this is an email that you can schedule your readiness visit with us. And of course, if you have any questions about how to use the system, please reach out to your employer services representative. So that concludes my presentation, but I am free, Nick and I are free to answer any questions if there are any at this time. Okay, there's one question. Do you have a published schedule of data updates in this test system? You know what? No, but we know what they are. I would think that you're, Nick, I would think that she's referring to the data refreshes.
Yeah, hey guys. I believe that those months are also in the testing guide, which is on the employer support portal. It's every 2 months. So we have one coming up in about 2 weeks from now. So November, the next one will be January and then March. So the scheduled ones are every 2 months. But the actual data snapshot date, we don't know until we approach the next refresh. So the one coming up will have a snapshot date of November 13th of 2020. But like I said, for the January one, we don't know that snapshot date yet. It'll be sometime in the middle of January. But the actual months we're doing the refreshes should be on the in the testing guide on the employer support portal on employersupport.calstrs.com.
Okay, the next question is, thank you, Nick. Is cutover to the new format still all or nothing? In other words, if a COE would need to request a waiver for the entire county, correct? Nick, could you answer that?
Yeah, that's correct. So, for example, if you're a county office and you have, say, a district that's ready to go live with the new file format, but your county, maybe your payroll system, you're not ready yet, the entire county will have to go with the old file format that the county office is going live with. So you can't have districts going live with new file format and you going live with old file format. It really has to be all the same format across the county. And regarding the waiver, yeah, it's the COE is going to request the waiver, not the specific districts if they're reported through the county.
Thank you, Nick.
You're welcome.
Renee asks, would a 6-month waiver request be denied? If so, what for? That's a really good question, and that's one that we've kind of looked at ourselves as well. The waiver really is for employers that are not ready with the new file format. And so it's kind of the default format, of course, if you can't do the new file format because of technological challenges or collaboration challenges that you might have with some of your dependent districts. So I can't promise anything, but essentially we're going to do everything that we can to help you be successful at Go Live. And if you are communicating to us that you're not ready with the new file format, but you are ready with the old file format, we're gonna help you do that. And the waiver process is essentially collecting some basic information that just tells us what your challenges are, when do you anticipate on using the new file format if it's not at Go Live, and just some other information, just so that we're really clear on exactly what the challenges are for you not using the new file format at Go Live. So again, I shouldn't say we'll never deny it, but to deny one means that we would be forcing you to use the new file format, and that just doesn't seem within the spirit of our approach. So if you're going to tell us that you're using the old file format at Go Live, we're going to help you be successful with that.
And John, I know you said this, but I think based on the waiver conversation, it's important to remind folks there's the possibility to claim 4 separate 6-month waivers. So again, to the extent the first 6 months there's, you know, there's not a readiness, there's not a comfort level, then there would be, you know, 6 months to continue to get prepared. And so you can go through that, you know, cycle as many as 4 times.
Yeah, thanks, Diane. And that kind of helps me communicate kind of the next point that I haven't said yet. So our main purpose, the employer readiness team, is to get you to successfully to use the new system at go live. Our secondary priority is getting to use the new file format. So even after go live, you're going to, and if you're not using the new file format, you'll still be interacting with my team and trying to help you make that transition from that old file format, the current file you use today, and the new file format. So, so those are kind of our 2 priorities that we have in the back of our mind. And you're right, Diane, we have 2 years after go live to help everybody make that transition to the new file format in the new system. Regulations says 4 6-month waivers, which equals 2 years, of course. Okay, any other questions? And then I can hand it off to Kim and Diane. Okay.
Okay.
Thank you so much,
Thanks,
everybody.
John.
Mm-hmm.
I have a really quick training update that I'd like to provide everybody, just sort of in response to a lot of the questions that we've been getting, and also a clarification. Our Masses training and development team will be presenting at our next EAC on their revamp of the training that they present to employers. That won't necessarily be specific to the new system. That will actually be more on how they've redone the suite of training that they offer, which is amazing. And I wanted to let you know, again, based on some of the questions we've had in the chat over here on the Q&A, there are 3 computer-based trainings or computer-based training on the big 3, what we call the big 3, which is creditable compensation, creditable service, and membership, available on the employer support portal through our pension administration, the administration system. So that is something that all of you can access currently right now. Also, hopefully going up either today or very shortly is a list of webinar dates that will be for the 2021 year. And those will be, again, focused on the teacher's retirement law, not the system itself, but the teacher's retirement law. So creditable service, creditable compensation, and membership that our training and development team will also be providing. And one of the things that they've asked me to remind you is it would be really helpful if you could have, if you're going to attend those webinars, once those dates are posted, to do the computer-based trainings first, so that you're going into those webinars really fully informed and with really good questions that weren't maybe answered by the trainings. And then so that the webinar is really more like a refresher and a Q&A to kind of answer your specific questions. So hopefully that some of that will get you what you're looking for. And then I do see a question here about how long in advance we would need to submit a waiver request. We're still working on the waiver process. You don't really have to do anything and worry about anything with the waiver process right now. That won't really come into play until we get much closer to go live. And all of those details on the process and how we're going to accept those waivers, those waiver requests will come to you by way of communications here at EAC, probably in our newsletter and in up on SO for you. So rest assured, we will make sure that is communicated to you. Also, we want to let you know and remind you that we do have a lot of training opportunities available to you. And one of the things we sort of stopped doing, especially when we hit this sort of quarantine period, is we used to have our training and development team come and do a standing training during this EAC timeframe. And we kind of worked through our topics, but we know that staff change and obviously now interpretations change. And you're going to get a survey here very shortly. When you close out of the meeting, it'll pop up a link for you to answer a very short survey about the EAC and whether or not it's been helpful. And I can't remember if there's an open-ended question on that, Diane, if you recall, but if not, and you want us to reinstate those sort of quarterly trainings with our training and development team coming to this EAC, and it's not available for you to fill in on the survey, please email us at that advisorycommittee@calstrs.com email address to let us know. We want to be responsive to the things that you need from us. And if that's something that you'd really be looking for, we're happy to bring that back for you guys. And I think that's the end of the training updates that I have for you. Again, if you could please answer the survey questions when that link pops up. I believe it's 4 short questions. Shouldn't take any amount of time. And I know that we've run a little bit long. I appreciate all of you staying. Are there any other questions that need to be answered here in front of everybody?
And let's move to the next slide, because while we're just wrapping up, I want to make sure that we socialize the dates that we're tentatively planning for the 2021 EAC. And so Kim had mentioned the survey. Yes, there is an open-ended question at the end. Again, it's not long, but wanted to make sure and clarify that through this fiscal year, 2021, we will and plan to be holding EAC via Zoom. So no need to worry about planning or arranging travel and time away from the office. I did want to socialize February 3rd and May 12th. Now, the reason these are pending is we need for CalPERS to solidify their board calendar to make sure that EAC is not in conflict with their board meetings. But we are fairly confident, again, that February 3rd and May 12th will be our dates, again, via Zoom. We are also, and I'm getting a little bit ahead of myself on this, but we're also looking at an August 4th conversation, as well as either a November 9th or November 10th conversation in 2021. Again, we don't want to socialize those dates too much because, again, those are also conditioned on the CalPERS board calendar. And we're also not sure if we'll be doing a combination of Zoom and in-person. I think that's just going to depend on COVID and comfort levels and caseloads. But again, we are definitely planning on doing Zoom only through the end of this fiscal year. So I just wanted to make sure we made that one final announcement before we start to lose people understanding we've gone about 15 minutes over. But if there are any other questions, I can hang out for a little bit longer and make sure that those get handled in the Q&A, at least get collected. And with that, again, we very much appreciate everyone's time this afternoon, and have a safe holiday starting tomorrow with Veterans Day, carrying through the end of this calendar year. And we look forward to seeing everyone in February. Again, advisory committee at CalSTRS.com if you have any questions, and the team can forward those out to the appropriate business unit. Thanks again to Nicole, always on the hot seat, always popular. John, appreciate all the updates with Pension Solution. That project is really starting to feel real, and it's coming to us soon. So with that, thanks everybody, and have a great rest of the day.